Good morning, I'm Carol Harmer from Charmer Trading, and this morning I'm going to talk you through where I see the euro going. That will be against the dollar, obviously, but bear in mind that the euro crosses are moving quite well as well. So maybe look at those instead of just looking at euros against the dollar, because if you can look at those markets as well, you get a key to whether or not the euro's running out of steam. Anyway, we'll have a look. We'll have a look and see what the euro's doing. So we last week was quite eventful, really. Down we come. We know we have support at 109.20. We know we do. And last week on the ECB, down we went again, and we created a double base. Now, with the double base, obviously there is a target, there's a measured target, and it is quite an easy thing to work out. It's just that a lot of people don't know how to do it. And all you do, you just measure. So you take this high, this is before this happened, you take these highs, so you've got a double top and a double bottom, and that is a total of 161 points. So all you do is you add onto the break 161 points, and that gives you a measured target of 112.48. Now, that is the basics of how to measure an objective on the top side. And obviously you know that 12.48 is really, really good resistance on the euro dollar. So there's no real surprises there. The surprise was the ECB last week, and the surprise was everybody in the world wanted to sell the euro when it was down there, and you never sell unless it makes a break below the previous low. I know that sounds double Dutch to a lot of you, but that is the way to play it. Because if you do, you're getting involved in the algos and stop hunters, and really you don't want to be doing that. So we always, when we have a big chart point or a Fibonacci level, we always do it on the second attempt. So we get the noise out of the way, and then we go in and we do it again. But there was absolutely no reason at all to sell the euro last week, and we actually went in and bought euro crosses, which was, that was at very good levels. So you can look across the board and see what the euro is doing against other currencies, and that really will help you if you're trading the euro dollar. Also, you need to look at the dollar index. So at the moment, our little dollar index is at 97.87. So, for me, I am seeing that the dollar is topping. I do. I look at all sorts of dollar instruments, and I have to say that I do think the dollar at this moment is topping out, which would give the boost to the currency market that it needs. So the currencies can then move higher. Let's take another little look. Now, it isn't like we haven't tried the downside. We have twice, subsequently to this break, and we haven't as yet been able to break below certain congestion areas. These little blips, like yesterday's low, of 109.90. Well, we know the market is supported at 109.90 to 109.80, and you've got to look at where the majority of the action was done, and the majority of the action was reversing Monday's declines. So it doesn't want to go down. It's had its chance to go down, but it doesn't want to. It's looking a little bit overbought, but basically neutral. It can go screaming up. I've now altered the parameters to 10.90 because that's where they work the best. So really, as long as we can hold, we're a little bit off this morning, but nothing drastic. We're just not anything drastic. We're 10 points lower. So as long as we can stay above this area here, we've got the 10.40 to 10.25. As long as we can stay above here, there is absolutely no reason why you wouldn't want to go in and buy the euro on dips. As I say, the technical indicators are favourable for euro. If you look at the euro crosses, again, they're favourable. You've got a measured target for euro, which is 12.5, which ties in very nicely with our chart points. And, you know, even the euro sterling, which isn't good for me, is looking a bit perky. So, you know, be brave. Don't worry about it, you know, whether or not you've missed this. I don't think you have. I think any level down, as I said, to the designated support area will be an opportunity to go back into a long position. We want to stay, as I said, above this area of support. But if we can't, it's not the end of the world. You know, even if we go below 109.80, you've still got that double bottom cushion down at the 109.25 area. And my theory of doubles hold, triples rarely do. If you give that 30 points on the downside, so you're talking about it going to 108.80, for example, that's where you put your stop. Now, if it goes below there, you don't want to be long with euros, because then we would be going lower to 107.5. So it is just a matter of taking care, looking at the chart, looking at the Fibonacci levels, looking at what the market is going to be doing. You can see where it hit that 38.2 virtually to the tick and failed the next day. So that's our first priority, is to get the euro above 11.11. Then you've got the 55-day moving average, and that's coming in at 11.13. So, sorry, 11.31. So really, you do want to get above there, and then we can go on to here. And then really, it's this area around here, which we're looking at 11.82. And funnily enough, your 61.8 is at 12.26, with your measured objective coming in at 12.48, with the high then over here at 12.50. So all in all, there's not a lot of reason to be short of the euro dollar at the moment. We're in buy dip mode, and until that changes, I've really got not a lot else to say today. Watch the FOMC tonight. That could be interesting. Okay? Have a great week, and I'll catch you on Monday.